The micro markets could do well for them or some of their companies.
You mean equity?
Maybe
or
equity? Yeah, but equity. Like I was saying, like something like was it, what do you call it? MD Link. It's pretty small. When I looked at the equity prospectus, they showed, I think, some of the revenues and stuff is a very small company, it seems. So maybe something like that could help them, and I would give them their history of exits.
So we'll give them some reprieve. Yeah, and also even pipeline too, because you may not discover something from your deals desk, but you may discover something from micro market. It comes to micro market and you're like, oh, they need like an additional 70 million in equity. Let me inject that and take them to junior market as an associate company. So who knows, a micro market may be a channel for pipeline growth for entities like equity.
Yeah, that's where you start out, and you can, if that's your exit, you take that capital, you fund another acquisition, and then rinse and repeat. Yeah.
So you could do a micro market acquisition and turn that same asset into a junior market exit. And that's how you build the ecosystem. That's how you generate the return. So yeah, really exciting time. That's the point I'm making. And I think micro market happening while Jamaica is in this rebuilding phase is quite opportune. It's good. A lot of companies will need capital and they don't have the collateral, they can't borrow it. But now they have this new channel. I know investors are averse to giving up equity, but it's available. It's now possible. You now have a choice before you didn't. So
exactly.
Yeah, I'm looking forward to that.
And that would satisfy one of the three things you're talking about in terms of getting, I think, new investors and stuff. One of the interesting parts, if you look at it, the micro market is so small. Look at a listing like, WIPT, West Indies Petroleum Terminal. I don't know if you saw so far how much has, so I think it listed at 50 cents. So if you saw the amount, I think I had a video, I recorded it, the buy queue. There were days where there's legit millions and millions of dollars buy queue, people who wanted to buy it at the 50 cents and no one was selling. And then it didn't trade until I think it started to trade at maybe 70 cents, but it was 5K units. And there's still a lot of demand. So it's the same supply of or the same concept of high demand, low supply. But the micro market, some of these companies, I don't remember how much it was they said, but the company could technically say, hey, we want to raise 10 million, 50 million. Well, how much is it? Is it minimum 50 million or something like that?
No, so maximum.
Maximum
50.
But say the company wants to raise 20 million. 20 million, that's a very small amount. If you have say the investment bank, Victoria Mutual, Mayberry, whatever, GK, say, hey, we want a piece of that to make it nice for us. Then how much does that leave the public with?
Actually, Preston, I would argue the other way. I don't think the micro market was set up for those institutions. I think the micro market functionally may end up working out better for specialized vehicles like equity and Novimig, because one, their capital is a bit patient, and two, they invest differently. When you have institutional funds, you're under more pressure. You kind of have to be more short-term oriented. You have to report quarter to quarter. You have to compare your return to the other guys that have the same assets. You kind of boxed in terms of what you can look at. And then the asset limits around related to the Pension Funds Act, it tells you you can only allocate a certain amount to certain asset classes. So you're really narrow. So I think that retail investors are going to drive the micro market. And I think specialized investors, like the companies I mentioned before, Novimig and Equity, are likely to drive micro market activity. I don't think the brokers, in terms of their unit trust, for example, or even their own prop book, is going to have appetite for that. It's going to be like, no. They can't even get approval. They can't get approval for that stuff. They can't, because the same resources you're taking to evaluate those investment opportunities, you could be evaluating opportunities that give 10 times the return because of its size, not the percentage.
Some of them probably don't even like junior market stocks, I've heard. I've
been in those meetings. It's a quarrel. I remember doing the analysis for a lab and pitching lab. And the chairman of the investment committee was so upset. He was like, this is a waste of time. What are you talking about? Why are we evaluating this? Why are we showing people this? Are you crazy?
Yeah.
I mean, I had a buy recommendation on it, but he was like, okay, if it's going to be a buy, put that is high risk because of the size and blah, blah, blah. It was a big thing. It was hard to get that approved.
Because of the size?
Yes, because he's saying that smaller companies can't compete as easily and blah, blah, blah. Remember, the life cycle perspective of size now. Smaller firms are more likely to be acquired or outcompete by larger entities and blah, blah, blah. But there's an obvious bias. There's an obvious bias. Well, at the time, NCB was over 200. This is 2019, so not really. But again, I had my reasons for saying it was a buy at the time. But I'm just telling you that your comment about that is very real.
Yeah.
When you bring that to our investment committee, I'm telling you, man. I'm telling you, there's definitely a size orientation. And they're not going to change them investment policy to allow for that. It's going to be like, no.
Unfortunate, but
yeah.
But more opportunities for us as retail investors.
Yeah, and you now forget about retail. You can do your own private equity. You invest in your own opportunities, and you can now structure them yourself and have an exit. So you, Dr. Simms, you, Dr. Preston, you can now structure a deal and have an exit, and you can do that. That's now a channel of wealth creation you did not have before. You may not have been able to go on that junior market run like some of the players did in the past. You can go on the micro market run. That's an avenue that you have. Yeah. So forget about trading the stock. You can trade the stock fine, but you can buy the securities, do the sweat equity, work out the deal, have your earnout structure, or you can do a convertible notes, and upon exit on micro market, those convert to common shares, and that's a liquidity event for you. And you do 4, 5, 6 of that, your standard of living is going to be different. So I just gave you guys some free game. I'm sure your guests don't do that.
No, not regularly. That's rare. That's pretty rare.
They're haters. They say I'm a hater, but I'm not. But it is what it is.